This is the DeFi Decoded podcast by 9 Point Partners in cooperation with Prophecy DeFi. The ideas and opinions expressed in this podcast should not be taken as investment advice. Always consult with your financial advisor before investing.
Hello and welcome back to another episode of the DeFi Decoded podcast. I'm Alex Tapscott here with Andrew Young. Andrew, you and I are both back in Toronto after spending a few days in New York last week. I was there for the mainnet event and some meetings, I guess, that were happening around that. And we ran into each other. We didn't even know we were going to be there at the same time. I think, I don't know if it was in a lineup for a party or at the event or something, we bumped into each other. But yeah, I thought it was really interesting. You know, I thought the mood was quite optimistic. I thought the programming for the event mainnet was really quite strong. There was a really, I think, good mix of speakers from the tech community, from the regulatory side, from the VC world and so forth. What was your big takeaway, if any, from the event?
Yeah, no, New York was great. I was visiting a friend and then just went to some of these conference events. I saw you there as well. And it was, one of the things that was interesting is it seems like a lot of crypto funds and VCs are sitting on a ton of dry powder. So they raised, during the crypto bull market, they raised a lot of money. And then before they could really deploy that capital, the crypto markets tanked. And so essentially all deal making came to a standstill. And now that the market has sort of found somewhat of a bottom, or at least a stabilized, these funds are now looking to deploy. And so it's kind of shocking to see that actually there's quite a bit of capital that's on the sidelines, which is a very kind of bullish signal for the rest of the market. One thing though I am seeing is a lot of them are looking to, from what I can tell, it seems like they are investing in primaries. So looking to do sort of seed round deals, looking for projects that haven't yet sort of launched. So it's not clear whether that capital will actually support the current crypto market or whether it's just being sort of recycled into newer and newer projects. But overall, it seemed like it was great. I mean, that was definitely kind of my takeaway. I think my other takeaway is that people are still, at least within the crypto bubble, people are incredibly optimistic. We don't see the, it kind of reminds me of the 2018 consensus conference. Which sort of scares me because it turned out we had another 2 years of bear market from 2018. But essentially, for the most part, people are still optimistic. I mean, there's a lot less sort of normies, I would say. It's definitely more and more sort of core crypto people are there, but I don't know, like what did you think of the conference? Because you actually went to the actual official conference as well, right? So curious to hear what you thought from talking to people and attending the events.
Certainly, I share your view that there are a lot of VCs who are sitting on dry powder, and I do think that they are looking at a lot of those pre-token opportunities. What I find really interesting is that a lot of those opportunities are coming in, or at least did during the bull market, at pretty sky-high valuations. And I'm not sure if any of them have done any down rounds since then. We've seen a couple on the CeFi side and so forth. But in terms of some of these more pure crypto plays, I think they are pretty cashed up. So we'll see if that translates into any changes in valuations in this period. I think there's an obsession maybe within the community with the institutions coming into crypto. And I think these VCs, I think people hope, will help to support the valuation of liquid tokens. There is some validity to that, of course, if you've got the option between something that's liquid and de-risked and proven, demonstrating whatever the value proposition you think it is, if it's DeFi, TVL, if it's NFT project, that it's got an active community, or if it's a layer one, that it's got protocol revenue, whatever it is, like whatever the metrics are, those exist at least for those public tokens, right? And for these private things, you hope that it'll work out, but the proof is not yet in the pudding. So I do think that at a certain point, the valuations do become quite attractive and you see maybe some of that VC money moving in. And by the way, people who are listening to this from a traditional finance perspective might be like, well, isn't that like a VC buying like public equities? That's not really how it works. In crypto, it does work that way. Most of these funds have a significant portion of their NAV in liquid assets and actually can recycle it fairly frequently. If you look at their statements and their, presentations, that's fairly common. But I think that the focus on institutional investing, whether it's VC or TradFi or whatever, overlooks another big group that could potentially impact the overall marketplace. And it's something that, as great as the conference was, I think was not totally well represented, which is what are big companies, what are large enterprises thinking about this technology? Now, there's a history, I guess, of enterprise blockchain. This was a term that came into vogue in 2016, 17, 18 to basically describe closed loop systems that enterprises were building with peers in their industry to, implement blockchain in some way. And typically they were advanced by professional services firms, enterprise software companies, and they were always proprietary, they were always closed, and they were always, closed and permissioned essentially. Now, I think that this time it's different. What you're seeing is not big enterprises building on, purpose-built private blockchains. What you're seeing is more willingness to build on public blockchains. And there's a couple of really important reasons for that. First, in the past, most enterprises, the interest in blockchain came out of IT, out of finance, sometimes out of like an innovation group. And, generally speaking, as a result, the projects were, these limited in scope, kind of highly technical proofs of concept. Now what you're seeing, and I think it's largely in part due to the growth and popularity of NFTs, you're seeing a lot more consumer-facing companies willing to launch with an NFT project as their sort of first foray into the space. And they're not launching it as some sort of internal skunkworks initiative. They're launching it because they think it's going to be good for business. And it's interesting because for relatively little cost and with low technical capability, a brand can launch an NFT project, which can have an outsized impact. I was speaking to someone very senior at one of the biggest tech companies in the world who was at the event. Won't name this person, but they're basically, they face enterprises and they're saying like the deluge of enterprises that are interested in NFTs has been quite remarkable. And, these kinds of businesses are going to react to what their customers are saying. Now, to be sure, like a lot of these things are kind of publicity stunts or not particularly meaningful, but others are. We've seen, major fashion companies like LVMH, household brands like Gucci, even Taco Bell launch projects. Nike has made $150 million from NFT sales. Starbucks' NFT rewards program is a pretty meaningful step, I think, in this direction, and is a attempt to innovate their core business. Like obviously they sell coffee, but really they are like this amazing, loyalty program and payments network. I think like something like a third of all coffees bought at Starbucks are bought, with Starbucks cards or with their app, right? So they've built this amazing ecosystem, and I think it lends itself. And again, where is the stuff being built? It's not being built on, XYZ private blockchain. It's happening on Ethereum or Polygon or Solana or others. And I think that's really, really, really interesting.
Yeah, and I think so. I'm curious to hear what what is happening in the private blockchain space specifically. What are the areas? Because I totally agree with you. I think everything is being built on public blockchains at the moment. But I'm just curious, like what specific areas are the advocates in the sort of private blockchain space working on? Because I feel like circa 2017, 2018, private blockchains were seen as they weren't sort of niche focused. They were going to be the main thing.
Yeah.
They're going after every potential use case. And then over time, it's become clear that public blockchains, like you said, are better for sort of the vast majority of use cases that have been invented for now. Like one thing private blockchains have sort of been talked about is maybe for securitization of stocks, or tokenization of stocks, stuff like that. So anything that needs sort of the legal system to settle the underlying transaction, a private blockchain to me actually makes a lot of sense.
Yeah.
But I feel like over the last couple of years, a lot of the energy has been sapped away from the private blockchain space, to the point now where I feel like they were kind of overhyped 4 years ago, and now they're probably undervalued now.
I like that. That's interesting. Yeah. I do have opinions on that. Yeah, I think so. If Vitalik actually wrote about this whole private versus public tension or discussion years ago, I think in like 2015, as some of these things were coming to the fore. And like you, he raised some of the things that might be useful for private blockchain, right? Which is that if you've got fewer nodes, you're going to make it faster. If you've got some level of trust, then maybe you can spin it up more quickly. It's something that is easy to regulate because you know who the participants are and so forth. But he also pointed out that it's closed, so it's not open to that kind of open source innovation, which is so powerful in this space, and it actually has been powerful for the whole web. I think you're absolutely right. There's obviously going to be lots of implementations of this technology that are permissioned or that are credentialed, right, where there's KYC on chain or whatever it is, to ensure that companies, financial firms and so forth that want to do stuff here are actually complying with the law, and have some level of control over the thing that it is that they're building. But I think that again, that is not going to happen on some standalone project that they're building themselves. It's going to be something that's built on top of this public good or this common infrastructure, and is going to be an implementation of Ethereum or implementation of something else, some other layer one. I think that's something that is not totally well understood. And I think that it's something that you're going to see more and more of, over the next little while. There's a very common analogy to this, right? Which is that in the 1990s, big companies built and implemented these costly intranets to try and mimic the benefits of the web while trying to cleanse it of its unruly and, anarchic kind of vibes. The web in the 90s was considered crazy, just like crypto is today. And today, really nobody uses intranets, but the web itself is more powerful than ever. But it doesn't mean that we're all living in some freewheeling, open, permissionless web, right? There are all these implementations on, applications built on the internet, ecosystems, whatever that, fit the needs of businesses and fit the needs of users as well. And maybe in some ways they're not serving them well enough, and that's why Web3, I think there's opportunities with digital ownership and property rights and identity and so forth. But again, I think a lot of these application specific opportunities, whether it's for trading stocks or shipping oranges or whatever, to the extent that you even need a blockchain for those things, it will happen probably on these public chains. And what I think is really interesting is that enterprise adoption not only lends credibility and validates the thesis for Web3, which I do think is really important and used to be super important. I remember in 2015, 16, a sniff of a big company doing anything with Bitcoin or with anything was everyone was like, oh my God, it's amazing, waving their arms in the air. Now this stuff comes and people barely registers. Starbucks doing a big NFT loyalty rewards program, on Ethereum, in 2016, its first year out would have probably quadrupled the price of the token. Instead, it was probably down 5% that day. So that's a sign of the maturity. We shouldn't be reacting to news unless we know that it's going to have actual economic input or economic impact. But I actually think they can have an economic impact on the values of these protocols. And that's something I don't think is totally understood, right? Obviously it's good for credibility and it helps to validate it, but it also increases the utility and the usage of the platform. If big enterprises are, settling big, I don't know, use an example, there's a loyalty rewards program on Starbucks, and, every day they batch and settle to the main Ethereum chain. There's tens of millions of dollars of value of loyalty rewards programs or transactions in their application that are settling on chain. That's going to be good for Ethereum, right? So in a way, I kind of think of NFTs as Web3's Trojan horse, opening up the gates of this enterprise citadel. They don't really know that they're on the path. It's a gateway drug, right? It's NFTs are going to happen. And then from there, Well, who knows, what other implementations of this technology they'll see. So I think that's really interesting. I also think, by the way, that enterprise adoption of public blockchains is probably likely to continue at the current rate, if not accelerate in this bear market. Now, that's different than in the past. Like in the past, markets come off and everyone goes, whew, it's a good thing we didn't announce a crypto project. We look pretty dumb. Because I think that, like, again, these are companies that are doing something that's more substantive than just like a proof of concept. And there's a couple of reasons why I think it's easier for them to announce and to experiment. The first thing is that the Ethereum merge has reduced the carbon footprint of the Ethereum network by 99%. And, look, like the criticism that NFTs were boiling the ocean was never credible, honestly. But it's now become obsolete. Like in my mind, the greening of Ethereum has just made it easier for consumer-facing brands to build on Web3, because the critique from customers or whatever, stakeholders, shareholders, oh, you're using this technology, it uses so much energy, it's gone, that's done, right? Like it's over. So I think that's a huge step forward. And second, I think that the merge kind of removed a crucial overhang. If you're at a big company, you want to build on a technology stack, you want to have some sense of clarity on like where it's going, right? Like, is this going to be kind of the way it is for the next little while? And having this big upgrade or big shift, I think created an overhang that prevented some companies from getting in. It's like, well, let's see how the merge plays out and then we'll jump in, right? Good companies plan for the long term, and so having certainty on that technology, I think, is really critical. And then finally,
Yeah.
Oh yeah, sorry. Do you want to jump in here? Yeah.
No.
I have one more
Finish it
point
up.
here, which is just to finish off my thought, which is that I think that weirdly, like the drop in price is unlikely to adopt a lot of initiatives that are underway, just because, on the one hand, they benefit from like the splashiness in a bull market, but also the lower profile of crypto that happens when we go through these cycles creates room to experiment and play around. And so I think you're going to see a lot of that happening as well. So I'll stop there.
Yeah, no. I totally agree with you. I think one thing that will maybe prevent brands from using Ethereum directly, I think even though Ethereum is now quote unquote green, it's still quite expensive to use the Ethereum chain. And so Starbucks, I think even if Ethereum was proof of stake, sort of a month ago when Starbucks made their announcement, they still would have picked Polygon, which is the chain they picked, just because they don't want, it's just too expensive for most sort of common use cases. Yeah. And on top of that too, like projects like Polygon, which are a little bit more centralized than Ethereum, they have just, particularly in Polygon's case, they have like an incredible BD team. They'll actually go and do the work of onboarding these sort of corporate partners, whereas Ethereum is obviously just fully decentralized. So, and for corporate partners, they want someone to work with that is part of the core team when they do these types of things. So I think it probably lowers the overall stigma of building anything in crypto, particularly if it's somewhat tangibly related to Ethereum. But I still actually think Polygon will be the main beneficiary of it, given their close association with Ethereum, the fact that it's fully proof of stake, and they just have an incredible BD team.
What about Polygon Edge Nets? Are those going to benefit as well?
Yeah, of course. Polygon Edge Nets, like SX Network, will also benefit. We don't have too much time. I do want to quickly talk a little bit about macro. Mm-hmm. Particularly, one thing that it's been really sort of notable is just the collapse, I should say, of pretty much every currency except for the US dollar. Mm-hmm. The sort of milkshake theory that all these currencies are going to get squeezed and all the money is going to flow into the US dollar has definitely played out over the last couple of weeks. US dollar is
where does that come, the milkshake theory? Is that like from like There Will Be Blood, like I drink your milkshake, or what is that?
Yeah, kind of. I'll find the exact I think so it was started by Brent Johnson, who CEO of Santiago Capital. He essentially envisions that he essentially looked into the we'll call it solvency of the US economy, realized that there was a lot of issues, tons of entitlements coming due, a lot of debt. And he was very worried about this. He's US based, but then he looked at other countries and realized they were even worse, an even worse scenario than the US. Not as much growth, even more higher levels of debt, even worse demographics. And so his scenario is just that the US dollar is going to suck up all of this liquidity from all of these local currencies, just because it's going to be, it's sort of by far the best, in the best position to go through what he thinks will be sort of a significant deleveraging. And what's interesting is crypto people have always been talking about the end of the US dollar, but what seems to be happening is just the complete dollarization of everything. You see it in crypto where stable coins are by far the largest sort of
use case.
by far the biggest use case. And we're starting to see it now where like the pound is almost at parity. And so without getting too off topic, it seems like we're seeing it, like the scenario that crypto people envision is that fiat currencies will collapse and crypto will sort of take over. What we're instead seeing right now is all fiat currencies are collapsing, but the US dollar is gaining a ton of strength. And what's interesting is it's making crypto look like it's performing really poorly, when if you actually price it against a lot of local currencies, it's actually been doing reasonably well. But obviously crypto is priced against the US dollar.
I mean, it's okay. So I have a couple of thoughts on that. Like, like if you'd told Satoshi in 2009 that like the killer app for crypto was going to be to dollarization, I think he would have like fallen out of his chair, or she would have fallen out of her chair. Like it's sort of an interesting unintended consequence. It's a reminder that, I think it's just a reminder that crypto is like a pretty small industry. Like this is an asset class, even at its absolute peak, which, you know, was a couple $1 trillion, and that's a rounding error in FX markets and in you know, global equities or fixed income compared to basically anything, commodities, like that's pretty small. So you know, this is kind of tail wagging the dog to think that like you know, crypto is going to somehow impact the dollar. I think it's obviously the other way around. I think that this is nothing new. Like March 2020, we went through the exact same process. You know, when there's severe financial strain and when financial conditions are extremely tight, there's a massive flight to the US dollar at the expense of every single other asset in the entire world, right? And so it's like, if you want to use this milkshake theory, it's like, what else? Commodities are getting pounded. Stocks are down significantly. Rising real rates are crushing bonds. Everything's getting put into the milkshake. It's more like a blender than a milkshake, actually. So you know, yeah, it's nothing new. Look, I mean, I think that, yeah, has crypto, it depends on your time basis. Like if you actually look at the price of Bitcoin from when this currency crisis, I guess, began, which I don't know, you could call it, was like, you could say it was a month ago when things started to turn, but really it's sort of accelerated in the last 2 weeks. You know, Bitcoin has performed really well, but if in the context of other risk assets from the peak to trough, it's, you know, it looks a little more ordinary. What's interesting is it doesn't look that much worse. Like most big cap tech companies, with the exception of like the, you know, Microsofts and Apples of the world, are down as much as Bitcoin is. And many of these major world currencies are down nearly as much relative to the US dollar. You know, the one sort of interesting point is like our Canadian dollar, maybe because we have this oil and gas tailwind, is only down, I think, 10 or 11% from its high against the dollar. Whereas, you know, the pound, the yen, these other things that are considered global, you know, currencies, if not reserve currencies, sort of tier two, have been just smoked. And it's quite interesting. So yeah, it's like, I don't know, duck and cover, you know, nobody's safe out there. It doesn't matter what asset class you think you're, you know, unless, I mean, I don't even know, like, what do you make money on? Just holding, you know, dollars in cash. Like even the bonds are getting smoked. So if you're short, I guess that's good. I don't know. Do you have any other thoughts on that?
No, I like one thing I just want to point out, because we've talked a lot about Arthur Hayes on this podcast. His prediction from a couple of months ago that central banks all across the world are going to participate in yield curve control, where essentially they're going to be buying up debt, is actually happening now. We actually just saw that in the UK. They just announced that they're sort of stabilize yields, because essentially there's just so much leverage in the system, they can't allow yields to blow out because people won't be able to afford their mortgages, and be a lot of issues that way too. So it's interesting to see. I guess one last sort of point is his prediction was that the U.S. He sort of predicted a lot of this, and he says the second prediction is that the U.S. will then sort of bail out these other countries by also buying out their debt. The Fed itself would, which is funny because it's something that was rumored a couple months ago, and the Treasury Secretary Janet Yellen actually shot it down. But as the U.S. dollar gains strength, who knows? Maybe we'll see that happen.
Well, I mean, it's part of this financial tightening cycle has been not only to raise rates, but also to pair purchases and to actually try and shrink the size of the Fed's balance sheet, just because a lot of these, instruments that they own are rolling off, and so they just sort of naturally goes down over time. But if they end up going into the market and doing the Fed Open Market Committee is like, okay, what are we buying today, boys? Let's buy British gilts or whatever. It's like, it's never going to shrink. It's going to just keep growing. It's going to be other stuff, I guess. I don't know. I mean, I think that the dollar is a huge drag on global productivity and on global competitiveness. And at a certain point, the world's problem becomes America's problem. There's going to have to be some kind of action, but I don't know what it's going to be. That would be pretty ironic, to your point, though, if that were to happen. All right, that's a great little episode. I like that. Coverage on the enterprise blockchain side, or I should say blockchain for the enterprise, because the enterprise blockchain is dead. It's like enterprise blockchain is dead. Long live enterprise blockchain. And a little macro talk as well. AY, pleasure as always. We'll see you next week. Take care, man.
The information contained herein does not constitute an offer or solicitation by anyone in the United States or in any other jurisdiction in which such an offer or solicitation is not authorized, or to any person to whom it is unlawful to make such an offer or solicitation. Prospective investors who are not residents in Canada should contact their financial advisor to determine whether securities of the funds may be lawfully sold in their jurisdiction.